Buddy Chris Dover here, head system traders at Macro Ops. Blah. And today I'm going to talk about the Sqn indicator and more importantly, how we categorize the market regime. Okay, so first things first is let's just go over this thing. This is my Sqn indicator. Dr. Van Tharp, he is a longtime trader, educator. Came up with this. It's a statistical tool to, it basically looks at the closing price differences of the last 100 days and gets a simple moving average of that, okay? And then, let's just open up the code here. And then from there, you can take it and then you put a standard deviation on that. And that gives you, and then of course the period is 100, so you could do it a 20 period, you could do a 50 period, 100. I like 100 period. And then from there, it tells you what the standard deviation is. So right now on the NASDAQ, as you can see up in the corner, it says 2.0. On the NASDAQ daily, there are 2% moves from the closing price to the closing price on average over the last 100 days. So back in December, around Christmas time, that was at 1.41. Now back in, let's say, the beginning of December, that was like 0.5%. So you see how this works? This is just telling you the average of the last 100 days price change, okay? And as you can see here, you probably don't need, if you've been in the market long enough, you probably are well aware of what this was. This was 2018. So let me kind of let's go here and just go back as far as we can here on the histogram of that, and you can see it spends just knowing if we had this indicator right here and we were to say what sort of strategies are we going to be looking to trade this thing. I'm going to say it's a long only strategy. You're going to want to be long more than you're short. Doesn't mean it has to be long only, I guess I should say, but you're going to have positive skew to the upside. So you're going to want to focus on being in for the majority of it. And when, let's say you flash red, you just kind of pop, get away maybe. So we're looking at the global financial crisis here. When you think about how dramatically violent the global financial crisis was with all that selling and everything, you only have a really small period of time that you were in there. And like I say, this is the worst time, in history, at least in modern history. And you can see that 9/11 through 2004, that whole recession, it was a long recession. This was a quick one, boom, down and up. Yeah, I mean, it felt long there, but this one just drug on for years and years. So, what's noticeable there, that's one thing you could do is you could say, okay, well, what is obvious about this with the Sqn? And when we choose a symbol like the NASDAQ, we can say, and you probably know it's just been straight up. But by looking at just the histogram, we can say, yeah, you know what, when it goes red quick and it comes back. And yeah, you may spend, 2015 kind of, for a year just kind of banging around. That's what that looks like. And then we spent that quick period of time in the Q4 of 2018 going down. But for the most part, this thing has just been nice and level. Let me put a price chart on it. And, obviously this thing NASDAQ just kept going straight up. So some characteristics that I like to point out here is if you've watched any of my videos, you're aware of this bull quiet regime where it just goes higher and higher and higher every day, and you see it fell off, and it kind of fell off, and then went sideways this summer, or this fall, I should say, the seasonal time that's historically pretty weak, but it had a positive skew, so it still was going up, and then we got into our bull quiet here. And it just traveled into bull quiet until we get to bull volatile. And the bull volatile is the blue. And you can see oftentimes when we're in bull volatile, it's a lagging indicator. It's not going to tell you the day that you need to make the changes or you need to make adjustments. But it is going to tell you that generally speaking, this whole run up here was out of the bottom of a bull volatile. See how quickly they bottom when you're in bull volatile. And it just kind of trended all the way up. So you could probably say right around here is when we entered bull quiet as a characteristic of trading, but it doesn't render on the chart until far longer. And then as we got to that turning point this past, let's call it May, I think it is, that's when we started moving into bull vol. You see it just straight up. And that's pretty indicative of bull volatile. And then it starts banging around here. It's looking back 100 days, of course, but that's because the moves started to be bigger and bigger and bigger and bigger and bigger. And then that's when the volatility comes in and kind of takes over, right? So I want to point out that it is not a leading indicator. So you don't use bull volatile to say, I'm going long because, or this is the market top because we're in bull volatile. So I need to start looking to call the market top here. What happens in bull volatile, yes, that's when you do get market tops, as you can see, that happens, but it's a lagging indicator. So by the time that you got into bull volatile and you start thinking to yourself, yeah, I'm going to short this thing, yeah, you get a bit of it. You do get a bit of it, but you've missed out on the other stuff, right? And see how quickly it goes down and then just right back higher. So in this case, you're going to want to be, bullish a lot more than you're bearish. So let me look at, let's look at Palladium. And you can see that we were in, if we go back, every time we get these, this is what I want to point out, is this is where the massive runs happen. Even though, yes, you get a top during a bull volatile, it doesn't mean that it's instantaneous. So if we look at when we got into bull volatile, price was $11.95, and then that thing ran to 1,600. So you miss out on 500 points almost, 400 or 500 points of a move. If you start saying, okay, I'm going to exit at bull volatile. Bull volatile can last quite some time. I thought we had a top in on back here on Palladium as we were moving into bull volatile. It seemed we were bull volatile. The characteristics were bull volatile. Came down, and then what happens? It rips higher. That is indicative of bull volatile. It is going to whipsaw. It's going to move. You're not, it's 2.74% changes in daily ranges, in moves during the day. So think about that. That's just some big moves, and you see it in the chart. When we get into this sideways, this yellow type little area here, as you can see, that's and as we were waning it also, I changed the colors, but you can see where it's at. Like it's very low intraday or day-to-day changes that you're seeing on the chart, right? Because as you can see, it's very compressed volatility. Very compressed volatility. Let's take a look at what we're seeing in the pound. So the thing about understanding these is currencies do it a lot different, because currencies are not like stocks where there's a constant bid, right? And they're always re-indexing and reshuffling the index. But what you can see here is, knowing my FBO strategy, we have this very compressed volatility within this area. And that's showing up on the chart. Like down in our Sqn, it's saying, yeah, we're kind of not very big moves. We had this big move and that flipped us positive rather quickly. But we didn't, it was like 0.5% moves. And then as Brexit vote came in, or I'm sorry, there was a vote in the UK a few weeks ago, I forget. I think a party took control. Once that happened, it had a big breakout. So what we have is compressed volatility and breakouts of that volatility and then movements back into the volatility. As you can see, we're starting to go down in daily change volatility. So these big moves, are added to it. These big moves are added to it, and that skews the data. So that's why I also like to use the Bollinger Bands inside the Keltner channels to get that compression so that I know how to be watching it. So on a quiet regime, which is in here, you're expecting a whole lot of that. So you can probably lower the time frame and start day trading this thing, you know, as opposed to trying to. You're not going to get a big move out of here. You're going to wait for the break out of it and then see how the response is, right? That's how you're going to trade the those bull quiets. Now let's get over into a bear volatile. So this, as you can see, this was doing it averaging 2.5% changes in days. So if the close was here, then it's here, and averaging over 100 period of time. So that's where you're seeing this big move down. And you also notice that we do get bottoms. This is where a bottom was formed. So the volatility side is where you get bottoms. So whether it's a bull volatile on the top or a bear volatile on the bottom, those are the environments where you're going to get that volatility that you're going to need to turn a market that's just been grinding down, as you can see. Like it's just been grinding, and you got that bull volatile, so we got a bounce, and it just kept grinding lower, 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 lower. We got another bull volatile, big area, and we got a bounce. So again, it's not a timing thing, it's just telling you the environment. And you should be able to recognize this one as the bull quiet, right? You see, just higher, higher, higher. Bear quiet is very quick. It's barely even noticeable. It's something that I don't usually, I don't pay attention to all that much. But again, we could go back to this, just looking at what we have on the pound, sorry. And we can see that for a good amount of the time, this is the global financial crisis. That looks a lot worse than the NASDAQ. And this whole thing is, yeah, we spent a little bit of time up here where it's nice, a little bit of time up here, but the negativeness, the downside is what is pretty obvious here. Again, let's have a look at, let's take a look at the euro. Pretty down, you know, just a lot more red and a lot more dramatic red. A lot more red on the Aussie. So it's just pretty obvious what it does, and we'll do it. You know, I'll bring up Bitcoin because let's see, what's my furthest back? I don't know. Maybe it's Bitstamp. No, it's not Bitstamp. Oh, yeah, okay. What I can say is Bitcoin gets into bull volatile, which you probably know. It spends a lot of time there. And this is the worst it's had as far as, you know, downside, going from the top back in December of 2017 to the bottom of December 2018. We had a big run up this back in 2018, and we're back down in here. But what you'll notice is it spends some time doing that, and it's low. Yes, we get it, but they're quick. And what's definitely interesting to know, statistically, you want to be long this asset. Now, this one, gold, hasn't been all that, you know, the first part of the coming out of the recession, and back in the recession, actually, back in 2002, I believe, it was a big run up. And as you can see, there was a big run up here. Actually, let me pull up the futures. I know that goes further back. Yeah, of course, you're going to have one of those. Thank you. Okay. Let's go back to, maybe that'll give us more data. Nope. So gold, okay, back to 2004. It just went from, I know it was down to 220, like 265, I think was the low in 2002, and a run up to almost 2000. I think got up to like what, 18, 19, something like 1900, and that's all bull volatile and bull quiet. And then from there, we've just been doing this sideways stuff, basically from 200 to 2000. And then we're just spending our time right around 1,000 to 1,500, and we're starting to see a little bit of action over here. But what we see is that we went from a bottom, and you see it, we got a bottom there, and it starts going higher, sustained it. Then you can start thinking to yourself, okay, I want to be long this asset because the trend is higher, and this is where we are. It's doing these, fits, 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, or I'm sorry, 1, 2, 3, 1, 2, 1. It's just like 3 steps forward, 2 steps back, 5 steps forward, 3 steps back. It's just doing the higher low and higher high thing that you want to see in a rising long-term market. And if you go and look at it on the daily, it's lower highs and lower lows here, but now we've moved into these higher highs, and basically anywhere we turn that is higher than here is still an uptrend. So if it gets and closes down in below the 1400 area, you might have some concerns. All right, that's kind of a quick overview of how I use it and how it's built and what it informs. It's not the be-all, end-all. It's just something to help. It's just something to help inform like what is the characteristics, so that I know down moves. So if we're in bear volatile, I know it's going to move pretty not in currencies, but in equities. I know it's going to move. It's going to turn fairly quickly. Even again, even if we go to the global financial crisis, you can see how little time it spent there. Yeah, it was November to March, maybe December to March. It was only a few months that actually this whole world was going to end thing. That was a V bottom there. So it took a long time. Oh, I'm sorry. That's 2019. What am I doing? That's this is not going back fast enough for me. Anyway, you can see how little time it actually spends in the bull volatile, and it spends the majority of its time in bull quiet, and then gets some big parabolic moves, as you can see, once it gets into bull volatile. And a lot of them are reversal. So I wouldn't be too concerned until we start seeing something like this, the run up into, you remember, January 2018. We had a big parabolic up move, and it corrected, and then another up move that got corrected, strong, and out of it again. So all those characteristics. Follow me on Twitter at ChrisDMacro. Here's me. And then it's my website, and then I'm also on. You can find me at any of those spots. You can see my work. Please like and comment, share this. If you got any questions, comment down below. You can always hit me up on Twitter. I'm pretty accessible. I may not be the greatest at emails or things like that, but if you got questions, ask them. I'm here, and happy trading.